All right, so in this training, when it comes to marking up the charts, now this is a strategy that I learned from the guy that I bought the indicator from, as far as how to trade the institutional orders. But as far as marking up the charts, I learned this from my cousin in our Trading Pro 5000 team. So basically, the way we do it now, some of these things are going to be a little foreign to you because you're actually still new to trading, and that's fine. But I'm just going to kind of just push along, and whatever you can understand, great. Whatever you don't understand, don't worry about it because you'll get there. But I want to try to explain it the best way possible. So now, basically what we do is we trade from the 15-minute, then the 30-minute to the 1 hour to the 4 hour. Now, basically, these are time frames, and this is time frames on when price action moves, or it's time frames in between when the next candle closes and when the next candle opens. So if I'm on a 15-minute time frame, it takes 15 minutes for each candle to open. Okay, if that makes sense. So 30 minutes for next candle to open or to form, 1 hour, so on and so forth. You get the concept. So I'm going to go all the way back until I see where current price stops. So let me just keep on going back. So current price stopped and went back this far. So I'm going to take a vertical line, mark it up here. So now what we're going to do is we're going to actually mark up support and resistance and then draw our zones based off of that. So what I try to look for is I try to look for wicks, okay? Because that's a strong indication that price either resisted a zone or hit it as support. So I want to take a horizontal line. And we're going to put that there. So I'm going to make this the daily support. So this is going to be yellow. Well, not daily support. I'm just going to make it support. So I'm just going to make that yellow and just cross this out here. All right. Then I'm going to find the next line. So I see how price kind of resisted here. Resisted line here, resisted, and made price drop to this next zone. Then I'm going to kind of look up here. Price hit that, dropped the zone. Maybe put another one maybe up in here because price kind of resisted this, but then broke it and kind of went up. Well, kind of resisted and went up, and then its next zone and went down. So yeah, so that's a good zone. So then the next thing I'm going to do is I'm going to actually take my rectangle tool and draw my zones based off of this. So I'm going to draw my zones from the body of the candle to the bottom of the wick. As time goes on, when you're learning TradingView, you'll know how to draw this up. It just takes practice. So we're going to make this light yellow just to match up. I'm probably going to draw it right here. Just do it like that. All right. Kind of do the same up here. And then what I'm going to do is I'm going to change the coordinates of these zones so that way they stretch throughout the whole screen. All right. My zone don't mess up. It's going to be a very good top-down analysis. I'll put this on YouTube and the training page so we can train together and teach each other how to master this lifelong skill that's going to pay us next to investing in crypto. How to do crypto. Right. So now, so Marcus, let me know in the chat if you follow me so far. Just let me know yes or no. Anything you don't understand, let me know. So basically, I'm marking up all these areas. So I'm going to get this next set here. So I'm going to hit up, I see some wick action here. So I'm going to put that here. Then ultimately I see some very strong wick down here. So they push price up. Awesome, Marcus, got your chat message. So now I'm going to draw a zone there. Yeah, we'll do one here. That's a good one. Then we'll stretch this out. So now we've been drawing up all these zones, and you can see how price is interacting with these zones. They're respecting it as support, and they're respecting this zone, but then when it finally breaks this, then it looks like it's resisting this same support before and making price hit this zone. So it's kind of like if you were a bouncy ball against the wall, like if you're playing racquetball, and just imagine like this is one side of the building, one side of the court, another side of the court, and you smack that ball and the ball's just bouncing back and forth against the wall. And then when the ball starts slowing down on speed, you smack it again. It's kind of like that. My dad used to play racquetball, so I kind of compare it to that. But that's how price actually goes against these zones. And this is what's going to help you to find sniper entries in the market. But especially like we're going to talk about when you find those order blocks, that's when you really want to get in. No more, no less. So now what we're going to do is we're going to go to the 30-minute. And the reason why we start from the small time frames to the big ones is because when you switch to a bigger time frame, it basically zones price out. So like notice we started here, 15-minute, but now that we zoned out, there's more price floors that we need to mark up. So then I'm going to take another vertical line and actually put it here. And then we're going to start marking up the floors, and this is going to represent the 30-minute. So then I'm going to zoom in and do the same exact thing. All right. So we see price respected this zone because you see this big giant wick and ultimately push price up. So I'm going to take another horizontal line and I'm going to look for those same wicks. So I see some wick action here and here. So I'll say, you know, this is a good one. And so I'm going to actually change this to probably to a green line. And then do the same thing here. So I kind of see a little wick action up here. So we'll do that. And then we'll kind of push it up to here. It's a good one. We kind of see price pushing up to there. So we see some wick action there. Right. Then we see what price hit here, and it was overbought. I mean, overbought at this point, reached its highest level. So it's at the ceiling, so to speak. So this picture price all the way at the top of the top floor of your house. And that's what made price ultimately start shooting down. So now we're going to draw the zones based off of these horizontal lines we just drew, and I'm going to do a different color. So we're going to draw the zones here, and we're going to actually make it green now. On top here, I'm going to make them as thin as possible so we don't clutter the whole chart, because we want to see what's going on. Might make this a little bit thick, not too much. I'm trying to stay away from that. There. Oops. Come on. All right. Now we're going to change the coordinates to these and stretch these out. That way we know which time frame these are. So all right, so now we didn't stressed out these zones. Matter of fact, you know what I need to do? Yeah, let's place another one up here. Forget that. This will actually represent the ceiling. So right now we did that for the 30 minutes. So now we're going to go to the 1 hour. You see now price is more zoomed out. So then we're going to start a 1 hour markup here. And then this is current price, so we're almost done. You might have to do some markup on a 4 hour, maybe not, but we'll find out. So now we can mark up all the way until price got to the top here. So now I see some wick action here, force price to go up to here. So this was a good support line. I want to actually make this color white, which is and nah, not that one. Let's see. Yeah, we can make it red. That's fine. We'll just make this red. Wick here. Then put one all the way up to here. All right. Now, want to make these zone color. We'll make it purple this time. Put this up here. Let's hit this wick, and then we'll just put one up here. We're going to change the coordinates to these, and then we're probably going to go back, check the 4 hour, see if there's anything else we need to do. If not, we're going to go back to the 15-minute, and then we're going to make a decision on when it's best to enter the market and trade based off of the order blocks. Order blocks is what you only want to look for. Those are only times you want to trade, because you're trading like the banks are. Or make your biggest moves. That's the secret after learning retail trading. So all right. So now we're going to go to the 4 hour. Yeah, so it looks like we marked up everything. This is current price, so we don't need to do any more. So now the real fun begins. So we go back to the 15-minute. And go ahead and look at current price. So let's say this is current price here. So then at this point, save our progress and let me go to the full screen. So Marcus, are you following what I'm saying so far? Let me know in the chat. Awesome, awesome. Okay, glad everything is making sense. So now, at this point, what I'm going to want to do is, let me push my lamp back a little bit so I kind of see my indicator. So then I'm going to turn on, now this is the order flow tracker indicator. So this is going to show us all the order blocks. So I'm going to give you a little bit of a background. So anytime when the banks put in a buy or sell order, so perfect example, they put in a buy order here. That's what made price shoot down so heavily. But what it does is it creates price imbalance because price moved too quickly. So the banks made money on this move, but now they're sitting there saying, okay, there are some sell orders we need to close so we don't lose any more money. So what do? They buy up here, they do a buy order here to make price go back to this imbalance move, close these sell orders so they can make their money, and then they put in another sell order to make money again. So that's how you have to understand the institutional side of trading. So when we look here, they put in a sell here. So we could have sold this all the way down to here. Then they put in a buy order because they have to fill in this price imbalance. So then at this point, I would immediately conclude that price is overall bearish. So it is selling down. So I would draw a trend line because at some point, price is going to actually come up to one of these lines, maybe up to this line, and then sell and drop again. So I wouldn't buy up, unless I was a very experienced trader, then I would buy up and exit and then wait for price to sell and sell it again, but I wouldn't do that. So what we're going to do is we're going to see, now it's a possibility as well. And here's another thing. When the banks put in this sell order, price did come down and then come back up to this area to fulfill this sell order, and then made price go down to here. So it's possible that price might actually come up to this or sell order block and fulfill that sell order and close it out and then drop again. It's a possibility. Or it may buy up and come back up here and fulfill this sell order and then drop. So ultimately, we want to wait for price to go up, and then we reverse this. Then we want to sell and get our money because we're trading with the trend. Okay. So now what I would do is I will wait for my moment. So let's go ahead and play the replay tool and figure out if price is going to come back. Okay, so price pushed up. Now it looks like price is going to sell from here because it came up to this sell order block that was initiated here. So it's probably fulfilling this sell block here and closing it out. And now the banks are saying, okay, let's put in another sell so we can make more money with everybody's money. And we kind of see that on the RSI here. It looks like price is pushing down right here. So then at that point, what I would do is, then this is when I will pull out my Fibonacci because I want to see if price is respecting that area. So you'll learn Fibonacci's as time goes on. This is just an extra tool. So I would take it for the most recent high to the most recent low here. And I see that price respected at 50%. So that means that this order here, so I'm going to actually just draw a line here. So I'm going to erase the fib. So since price respected this 50% and is off the Fibonacci, this sell order is very accurate, which means that when price came up and respected this, they fulfilled their sell order. So now they're ready to sell again. Hold on for a second, guys. Gotta pause this recording. Somebody trying to. Okay, I'm back. So as I really do. All right, so I'm back. Hopefully we don't have any more disturbance. So as I was saying, so this order block is accurate because the Fibonacci is saying that price is respecting the 50%. So the banks had to buy up to make up 50% of that sell and then sell it again. So at this point, this is where I would actually sell. So then I would turn on the Delorean indicator and I would wait. And this is how the indicator works, is that you notice previously here, price sold heavily. That's when this red EMA, this yellow EMA or yellow line crossed over this red line. So anytime when that happens with this indicator, that just means that a strong trend is coming. This dude do not stop calling me. Some people are retarded people. I blocked the dudes. We ain't gonna have no more interruptions. As I was saying, this signifies a strong trend when this yellow line crosses the red line. And that's what it did here. So then I will wait for this yellow line to cross this red line. And then that's when I will go in for the sell because we have a lot of confluence or proof that price is going to sell. So now I'm going to play the replay tool. Well, first thing I would do is I would take my risk to reward tool and go ahead and plan on selling. So I'll put my stop loss here. You'll learn what a stop loss is. Entry here. And ultimately, price is probably going to come down to one of these buy sell orders or maybe down to this zone like price previously came down to this zone before it reverses, and then the bank puts in a buy order to push price back up again. So I would just put this first take profit here. And then I probably would just put a second take profit down here. No, not a let's say a horizontal ray. And so you'll learn how to put in stop loss and take profit through the university. You'll learn that. So then I basically will put in my stop loss and take profit, and then I will wait for the yellow EMA to cross the red EMA, and then that's when I would initiate the sell trade. So let's see what price ended up doing. All right, so price is pushing down. Look at that, price drops. Now, once this yellow EMA crosses red EMA here, that's when I would initiate my trade, and I would be in the trade. And price dropped instantly and hit to, both of our take profits here. So that was a very, very, very good trade. And this is proof that the banks put in this order. Now, question is, what price? We have a buy order block here. Is price going to reverse and start to buy up again, or is it going to bust through and come down to this next zone? Let's see. So price busted through again, dropped again. See that? Dropped again. So then at this point, I'll be waiting for a wick to form on any of these candles to show proof that maybe price is hitting some kind of zone and ready to reverse. Let's see what the next candle does. Dropped again. So now it looks like it's respecting this next zone that we drew. And at this point, wow. So I got to show you guys something. I just got an alert on Euro USD. So I tested this previously with the same indicator, and price sold and hit the first take profit live. So I'm practicing this on demo. So I probably made, let me share my phone screen, show that this indicator works. All right, so let me get into my phone here. Go into my MetaTrader 4. So made about $48 off of this indicator that I tested previously on demo. So it shows that this indicator works. It's letting us know when the banks are making moves, and when we go with it, we make money. So that's dope. All right, so now let's go back to NAS. So this is NAS. So now, is price going to respect this zone here and then start to reverse up? Possibly, because the RSI is letting us know that price is oversold. So it can only go down for so much before it starts to go up. Just like in the crypto world, if Bitcoin dropped all the way to the bottom, it makes sense that it's going to transition and goes up. Same thing with Forex and indices and all that. Okay. So now let's go ahead and play this again. Dropped again, but it's respecting it. See that wick? Now it's starting to respect it. We see all these wicks is respecting this zone. Now it's trying to come back down, but it's really respecting it. Then it dropped again, so it kind of broke it. So this was a huge move, but why was it? The banks put in this move. But now what's going to happen is it created price imbalance. So now the banks are going to eventually have to put in a buy order to fill in one of these imbalances here and make it drop again. So let's see if that happens. And then after that, we'll pause this, we'll stop this recording and do a question and answer. So now, okay, price starting to buy up a little bit. Let's see if this is it. No, it's pushing down, still pushing down. But now it's starting to push up. The banks are like, okay, we got some orders, we got some sell orders to refill because price drops. Let's put in the buy order. So that might be the case here because you kind of see it on the RSI, it's pushing up. So let's see if it pushes up. Yeah, see, it looks like it's pushing up. And see the yellow EMA is about to cross the red. So it's about to push up, but then it's dropping again. So it probably came up to the closest imbalance here. And then the bank said, okay, we closed out this order, so we're going to sell again. That's what it looks like. But no, price might buy up again. Okay, yeah, so the banks are like, we're not done. We got to fill in these orders. So it did that here. Guess what? Now we have a buy order block here. And the Delorean EMA indicator supporting that, it crossed over. So price is probably going to sell up to this point, maybe even push up and fill all these orders here. Let's see. Pushing up, pushing up. See, price is pushing up. Another buy order. Trying to fill those imbalances. See, it's coming back and then it's selling again. So yeah, they're going to sell again. Fill that imbalance, and then they're going to push it back up. They're like, okay, we're going to do another buy order. They're respecting this zone. And now price is pushing up ultimately. So you guys kind of get the idea how this indicator can actually help you to make make decisions on buying and selling exactly when the banks do it. See, it's filling those imbalances from before. And then ultimately it started going up because there's more imbalances they had to fill up here as well. See that? And now it's going back up to this previous order block that we did before, because they had to fill the imbalances because of this previous move here. So then you could have made money off of this buy here. And then now ultimately it probably would have bought up some more. Yeah, because it's respecting this area. Might even go up further, or it might reverse and they might close out all their sell orders, because see, there's more buy order blocks here. But then they already then filled up that previous order from here. And now they're ready to sell again. And you see that the yellow EMA is about to cross the red. And now it drops. So we traded this correctly, we would have won this trade. And that's how I'm going to trade this indicator. And again, I'm new to it. I just bought it today, but you can kind of see that it works. And if you trade it this way, when the banks trade it, that's how you're going to be successful. So that's pretty much it for this session. So I'm going to stop this recording and open up for a question and answer.